Welcome back to Tezos Explained. Today we are talking with Arthur, who will help us to figure out RWA. On-chain RWA grown to $35 billion recently. How we ended up here? Why we saw such a huge growth over the last years?
I mean, there's a couple of factors, and it depends also what is counted in RWAs. I think a big part of the story has been stablecoin. It's by far the most successful RWA and also the most boring RWA. It's essentially a tokenized dollar bank account, but it's been very important for a lot of markets. So it has worked in crypto markets and DeFi markets. I think the use case usually is people want to borrow in dollars against their position. People want to trade in and out of position and go flat. And so they've been using stablecoins for that, or more recently, tokenized treasuries or tokenized money market fund. So these are crypto native people who have crypto wallets, and they just find it convenient to just stay on chain as opposed to going through an off ramp and back to their bank account to buy anything. But it's also been a big story for remittances and in emerging markets, particularly with weak currency. So you've seen essentially a lot of Latin American countries, some Asian countries. So from that perspective, I think, yes, it's been a big success for stable coins. And recently, legislation in the United States, like the Genius Act, have given clear guidelines for how to launch stable coins. But the main change has been the recognition by the US government that, we're not going to come and say this whole thing's illegal, because there's actually codification for it. There are publicly traded companies who are stablecoin issuers. So that recognition, I think, has made a big difference.
Aren't stablecoins very profitable for some countries, because basically stablecoin issuers invest into the debt positions on, for example, US. So they buy bonds and things. Isn't it profitable or helpful for the countries?
So there are a couple of things here. First of all, stablecoin issuers making money hands over fist is a new phenomenon. We've had decades of near zero interest rate policy. And all of a sudden, we jumped in 2022 to 5% rates in the most unprecedented, fastest rate hike. And I think based on technology and innovation is moving for now, I think rates are going to stay high for a while. But we'll see some margin compression. I think at some point, stablecoin issuers are going to have to pass some of that yield in some form, and they already are in many cases. I would say for governments, it's been for the longest time a choice between saying, well, there's two things we really love. We really love inflation, and we really love financial surveillance. Which one do we love the most? And stablecoins, in the way that they worked, they have KYC when you onboard and when you offboard, but they don't KYC every single hop. Instead, what they went to the regulators and said, well, we have chain analysis tools, and then based on those, we can do good enough AML protection. I think it was an open question whether or not regulators would be okay with this, because if you were PayPal, for example, and you were saying oh, I'm going to onboard people without doing KYC, they were no, absolutely not. Every single person is going to have an account. You need to have a KYC. But somehow in stablecoins, you didn't have to be in that regime. And stablecoins would be far less useful if you needed to do this KYC onboarding for every single account who's going to hold them. It was not obvious that the government would be ready to accept that. At the same time, yes, they've been a huge consumer of bonds. And it's, the more people are using the dollar and the more there are dollars holders out there in the world, the more you can inflate. So, which do you love more? Being able to inflate the money supply without having too much of an impact on prices because it will be absorbed by the rest of the world? Or do you love financial surveillance more? And they picked inflation. I'm glad that they did. I think it's a lesser evil than global surveillance.
Absolutely, I do agree with you. What about other asset classes in RWA?
Those have been smaller. People have been pushing precious metals like gold, for example, have been pushed for a bit, and it has some adoption, not nearly as much as stable coins, even though there's some overlap between people who like cryptocurrencies and people who like gold. A lot of people skeptical of the government, concerned about inflation eroding their buying power. They were buying gold before, they've been buying Bitcoin after. So there's a bit of a product market fit here. With that said, there's also a lot of options if you want to hold gold. Tokenized stocks have also been a thing. So again, I think gold, the idea of why would you tokenize a stock when anyone could open a brokerage account and have access to it? I think it's targeting those crypto native users who have a wallet. Maybe they don't even have a brokerage account. They just want to stay on chain and they want to have access to the stocks that they're interested in buying. It's on chain. It's easy.
And I think still there are some countries where you cannot easily access some type of stocks and you can possibly access them on chain.
Yeah. I think the global aspect is quite important. There are some brokerages which are very open in terms of countries. I have not checked that, but you take something like Interactive Brokers. I think if you live in Brazil, you should be able to open Interactive Brokers account. I'm not exactly sure, but they are like almost semi-professional. And yeah, in practice, accessing those things is harder, and having it on chain, you can use this global reach. There's also been, this is taking us back a little bit, security tokens. With the word for it in 2019, a lot of that took place on Tezos. But they weren't actively traded. They were mostly a primary issuance type of story, where it was more of like, we have existing shareholders, we're going to tokenize our shareholder registry on a blockchain. So the blockchain would give you some sort of traceability as to what was happening, but the asset was much more weakly on the chain than it is in these new RWAs.
Yeah, okay, I see. What about Etherlink? Are there any RWA present on Etherlink?
Yes, they are. So there's a few categories. A lot of them have been provided by a company called Midas, which has tokenized different things, including treasury bills, including some yield funds. So we've seen those with Midas on a Tezos blockchain. And of course, one big initiative is uranium. So uranium has been tokenized on Etherlink. And it's something where there was some involvement from the Tezos Foundation and Trilitech. So it's not just something that just happened to the chain, but it's a first. If you want to buy spot uranium right now and you don't want to buy 100,000 pound, that's pound weight of uranium for millions of dollars, it is pretty much the only game in town.
What are the plans about other exotic assets for Etherlink?
I think commodities are super interesting because the regulatory status of spot commodities in most countries is much more amenable, I would say, to work on a blockchain than it is for securities. And also, like, there are fewer markets for spot commodities. So in terms of the opportunity, like, there's an opportunity to create something that doesn't exist as opposed to trying to replace other systems. And there's a better fit in terms of like the technology and the regulatory. So base metals, I think, are really interesting. So things like cobalt, cadmium, some precious metals as well. I think there's still some interest here. Copper, lithium, all of that. There's an interesting play here.
What are the recent developments that push RWA forward?
I think it gets really interesting when they start interacting with DeFi primitives. So there's been, again, lots of innovation in DeFi primitives. But if the only thing you can do with DeFi is do more DeFi, it's not really helpful. You want to be able to finance something. There has to be some connection with real productive things in the world. I think there's a bit of cynicism sometimes where people say like, oh, the stock market, you're just gambling. It's all zero sum. It's not zero sum. Like, when you put money in the stock market, even in the secondary market, you are giving liquidity to someone who gave liquidity to someone who gave liquidity to someone who financed a business. And that business has grown and has innovated and has done things and has hopefully the things that have helped, the world. In the same way, I think if we want those DeFi primitives to be meaningful, they've got to be put towards some purpose. And when RWAs can interact with lending, for example, or with DEXs, that gets really interesting. So if you take something like uranium, for example, on Tezos Etherlink, you can trade it in an order book DEX called Angie, and then you can borrow against it with Morpho. So you have these primitives, and then on top of that, perhaps when there's more liquidity, you can imagine perps, which is a nice innovation from the DeFi world, and all this interconnectivity and permissionless innovation that comes from the ability to write smart contracts.
Yeah, that's amazing. What about other side? Are there any things that really blocks RWA development?
The main obstacles is one is regulatory. I would say it's easier for commodities, but nonetheless, it is much more challenging than just doing pure tokens. And the regulations are evolving. So clearly, regulators are aware of this and they do want to make it possible to use blockchains to do this type of activity. And the second one is, I think it touches a little bit on the regulatory side. It's the product market fit. So what's interesting with the uranium is that, I'm going to caricature, right? But you talk to some crypto users and they say, well, that's not going to make me a millionaire by next week, so I'm not interested. I want something that's going to 100x. And yeah, I don't think uranium is going to, 100x, even if nuclear power really picks up.
But actually, many nuclear development companies, their stocks grew in price recently because of the escalation.
Yes, no, absolutely. I mean, I think it's more likely for a company where there's a lot more uncertainty that for a commodity. Of course, the flip side is there's less downside to uranium. But if you're looking for this hyper volatility type of thing, then maybe uranium is not as attractive. And then you talk to more institutional buyers who are like, oh, we love uranium. We have this whole thesis about uranium. We want to buy uranium. that have to be on a blockchain. And again, because I think they have internal processes, they have legacy systems, they're still like cautious about, how something that's on a blockchain might be regulated. They don't jump on a token. I think real RWAs are going to sit a little bit in this uncomfortable area for now, where they are not sufficiently exciting or volatile to really attract the crypto audience, versus appealing to like more traditional investors who are reluctant to go on a chain. That's, I would say, probably the biggest obstacle right now.
Now, well, as we are wrapping up, I think there is another question that is more DeFi related rather than RWA related. If you would have $100 on Tezos Layer 2, what would you do with them? Having all the broad ecosystem that we have.
I'm going to give the safe and boring answer. First of all, how you invest $100 or what you do with $100 depend on your personal financial circumstances. And it also depends on the rest of your portfolio. If your entire portfolio is in uranium and you have an extra $100, don't put it in uranium. That's right. Diversify. There's a lot of things that you could do. I would say, like, on a risk-reward adjusted basis, probably looping opportunities with yield products are attractive, especially with the incentives from Apple Farm. They're not riskless.
There is no riskless DeFi at all, nowhere.
No. And there's always smart contract risk. So, bearing in mind that this is not riskless, and especially if you just tell me this is not $100, I still think it's quite attractive on a risk-adjusted basis. But understand that this is very much not riskless, especially if you start looping. If you start looping, basically you're saying like, well, if everything goes well, you're going to get this like 100% APY. If there's any glitch, you'll get liquidated and you'll go to zero. The thing is, I would say one of the most important aspect of investing before even like thinking about like what asset class or anything like that is risk management. That's fundamental. You see on Twitter people who like, trade and they make fortunes in crypto or whatever. They'll make millions trading this and then they lose it all. Good risk management. That's the most important thing to understand.
Thank you very much for joining us today. It was an amazing conversation and see you next time.
Thank you.